Let's talk about inheritance as a whole. So generally people have their owner occupier home from what you see, which let's assume it's paid off. They would have superannuation and what's left over in superannuation, and then other investments as such, right?
A little bit of cash, property shares, whatever the case may be. So those are sort of the most common ones. And basically, if you inherit cash, it's nice and simple. There's no tax that applies. It's just after-tax money that's sitting in your bank account. You can pass that on through your will, and there's no tax that applies. Happy days. With an owner-occupied property, because that's a CGT-free asset, so long as it's always been a family home, that basically if you inherit the family home, you can sell that home straight away. You can sell it CGT-free with the own residence CGT exemption, and you basically have a 2-year window in which you can sell that asset without paying any capital gains tax.
So someone passes away, that then gets transferred into your name. You then have 24 months to sell it before the CGT would start.
Correct. And so you could rent the property out, no issues there on CGT, but once you go past that 24 months, it's treated as if the cost base of the property is the value at the date of death. And then if you get a gain on the property, then you pay capital gains tax as per the capital gains tax rule.
So let's assume my parents' property is probably worth $1.5 million where they live in Foster. I inherit that, no debt on it. 24 months later, I say, let's rent it out. And then it grows from $1.5 million after the 24 months to say $3 million. The $1.5 million that I inherited it at, no CGT payable on that, but the $1.5 million of growth it's had, there's CGT liable on that.
Yeah, so it's almost like you bought a property with a value as at the date of death, and whatever you sell it for gets treated as per. If you move into the property yourself though, and then it becomes your principal place of residence, then it gets the PPR exemption, so there's no tax.
So you can move into it essentially and keep it going.
Exactly right. And you could even use the 6-year rule where you move into the property nominated as your principal place of residence, and then you move out and move into a different property, and it can still be nominated as your principal place of residence, but
there you go.
You can only have one principal place of residence at a time, so you can't be claiming that exemption on multiple properties.
So assuming someone inherits a property where they don't own any property, they could potentially move into the property for a period of time and then move out, and then they've got 6 years to think about selling it versus the 24 months.
Yeah, or even if you folks, depending on where they live and how much the value of that property is, if you're living in your 1-bedroom shoebox in Marrickville and they're in a $5 million 2-bedroom with a cupboard in the hall in Rose Bay, you could move into that property, nominate that as your principal place of residence, probably going to give you a lot more tax upside down the line